Hey, what's going on, everybody? This is Yusuf Scott coming to you again for the second time today on a video I thought that I would recreate because of the type of response rate that I've seemed to have gotten over the last few months on YouTube. Alright, so this video is going to be on how to always win when trading Forex. Alright, now for those of you that have watched the earlier video, it was a two-part video. I want to make this video very simple and easy. I think that video was a little drawn out, and I just want to just be straight to the point and show you how to do it. Now, for those of you that are trading and you happen to see something like this, or you just don't know which way the market is going, an easy way to make a profit, alright, an easy way to make a profit is this. Very simple. Now, in my earlier video, I mentioned trading at the smallest volume possible, 10 cent a pip. It really doesn't matter what volume you trade at. You can trade at 10 cent. You could trade at the volume that's suitable for your size of trading account. If you normally trade at $1, you can trade at $1. You can set your first and second trade at $1. So this is what you would do. Let's say you saw this area right here, and you're not sure which way the market is going to go. And what we're going to do, we're going to focus on. Let's say we're focusing on this red candle right here. Very simple and easy. All you would do is you would place a buy trade and a sell trade. So you place a buy trade, and then you open up a second trade and you place a sell trade. That's all you do. Now, what you want to keep in mind is that wherever the market goes from this point, you will be in the money on one trade and out of the money on the other trade. So basically, if the market goes up 1,000 pips from here, one of the trades, the buy trade will be in the money, and the sell trade is going to be out of the money. They basically cancel each other out. All right. So the only deficit you will incur is the difference between these two trades. All right. If you got in 2 pips, 2 pips away from if your buy trade and your sell trade are 2 pips away and you're trading $1, you're $2 in a hole. All right. So the difference between these two times your volume will be pretty much what your deficit will be. So all you would do is you would place your buy and your sell trade and just let it run until you realize which way the market is actually going to go. Now, this is where I want to make things very simple for you. All right. If you are trading, if you're not familiar with which way the market is going to go, what you do, set your support and resistance. That's all you do. All right. So let's do this. Let's set our support and resistance. Let's go to the 4-hour chart. Let's just set. I have some set already. All right. So let's set our support and resistance. Here's one. We're gonna go with something like that's good enough. I just want to show you guys what you could. This is a nice line here. So let's say you saw that this area right here. Let's say you open up your chart for the first time and you happen to see that you don't see none of this. All right, you don't see none of this, but you see the market coming down to a previous support. What you could do is you would probably bet that what's going to happen is it's going to bounce off support and go back up, because trading Forex is nothing more than just like playing ping pong. It just bounces back and forth. Hit off support, hit off resistance. The market does two things. It goes up and down all day long. So if you can realize which way the market is going, you're 50%. Instead of you being 50%, because when you're trading, you have a 50% chance of winning. The market can only go up or down, so that gives you a 50% chance of winning. What I do is help my students increase their chances of winning that trade. increasing to 50% to 75, 80, 85%, 90, whatever. So with the use of certain tools and certain very simple strategies that I have, I realized profit easily. So with this, all you would do, you open up your chart, you see the market coming down to support, you place your buy and your sell trade. So let's say this right here is support, but what you want to do is set your buy and your sell trade. So what we're going to do, we're going to open up, we're going to change this to, let's change this to yellow, and then we're going to place another trade, and that'll be your, one of them to buy, one of them is to sell. So you see support right here. So if, now mind you, this is the 4-hour chart. So let's just say, for instance, the market is coming down. You see it's coming towards support. And you see that in the past, let's shrink this down some more. You see that in the past, it was respecting support. You see you have some consolidation there. You see it came up to that level or that range there. So to me, that is a strong level. You see it tapped off a couple times, a number of times. It's a strong level. So the likelihood of it coming down and bouncing and going back up is highly probable. But what you want to do, you want to wait and make sure. So all you do is you place your buy and your sell trade, and you see that the market is coming down to support. So you're expecting for it to possibly bounce off of support and go back up. So you have your buy and your sell. Over the next, let's say, day, you see that the market has started to come up. You know, if once you see the market has come up high enough where you're confident that it's going to continue going in the up direction, that's when it's time to put in your money trade. That's when you place your third trade and you let the market do what it do. Goes into profit. Very simple. Now you have a winning trade. Now, this is what you could do. When you place your third trade, you can close out the first two. You could do that. There's no set rule in how you do it. You can do it that way. You can close down your first two, or you can just wait until the market keeps running and running as high as it's going to go, and wait until it hits resistance. And then when you realize that it's hit the wall, the resistance wall or ceiling, whatever, which one you want to call it, you close out all three. You're happy you've made your money. You walk away. You've made your money. You know that you have three trades open. You have two buys and one sell. You have your money trade. These two cancel each other out. You're in the money. You made a great deal of money. Very simple. So that's how simple it is. It is not a whole lot to it. Basically, what you want to do, first thing, is pop your buy and your sell in. It doesn't matter if you realize where support and your resistance are located. You know, just throw your buy and your sell in, and then you can shrink down your chart, and you can look at the market for what it is and say, okay, here's support, here's resistance, here's support, whatever it is you need to do. And then you just watch, okay, the market, I can see that the market is trending downward. So my guess is that it's probably going to bounce off of support. And then when it bounces off support, that's when you throw in your buy trade. Take the money. Just the same as when you saw that, okay, you saw a bounce here, it came up, and let's say you put a resistance line there, and then it fizzled on back down, and it came back down, it bounced again, came back up, went back down, bounced again, came back up, bounced down again, but then it broke it. So what you could do, you could just follow, you know, if it's not going up, it's going down. If it's not going down, it's going up. So if you realize that the market, that you've taken a market from coming down, it bounced off of here, you're taking it up, you know that when it hits resistance, it's going to go back down. So you put another sell trade and go back down. At that point, you should have an idea of what the market is doing. I can see that the market is bouncing off this level here, this almost too even. it's bouncing off that level, which is usually a very strong support level or resistance level. So what you could do, you could just set your support and resistance lines and set your buy and your sell trade and watch the market do what it do. So just want to make this short and simple, you guys. It's really a very simple strategy. It's not anything intricate like my other strategies that I have that you would really need to a bit of a lesson on learning. This is very simple. It doesn't take a whole lot. I just wanted to get you guys to understand it's just 3 steps. Boom, boom, bam. Throw your buy and your sell in. Wait for the market to show you which way it's going. And if it's going in the buy area, throw a buy in. If it's going in the opposite, throw a sell in. Wait until the market, wait till you realize a great profit. Close out all 3. Good to go. So I just wanted to show you guys. I don't mind giving out, strategies like this. Everyone should be making money in Forex. There's no reason why you shouldn't. So I just wanted to provide you guys with a sure enough way to find profit. This is by far one of the easier strategies that I think mostly everyone should understand. Depending on your style of trading, this could be. Some people may not like this. I don't know. It really depends on your style of trading. But some of my other strategies you could really make use of and find a great profit. So that's all I really wanted to show you guys for today. This is nothing more than a very simple way to find profit in the market. So that being said, you guys, I definitely appreciate you guys tuning in. Hopefully this video was a bit more straight to the point and gave you more concise instruction on how to do it. If you have any questions, feel free to email me at sodarneasyforex@gmail.com. I have no problem with answering any questions that you have. I look forward to helping you guys soon. Thank you so much. Take care.